Hi, this is Brent from TradeGuild.blogspot.com, and it is actually November 10th, about 12:30 in the morning. I was getting ready to go to bed, and I was looking at my charts. I have to get up early to have the dentist work on my grill, and there's just too many interesting things to let this pass without a little video. So, first of all, we're going to take a look at the Dow Jones Industrials, and I'm going to zoom in a little bit here and whip out the old marker. Um, a couple things. One, we kind of didn't really make a new high here, which is significant because if we zoom out a little bit, um, the definition of an uptrend is higher highs, higher lows. So we have been getting the higher high and higher lows, as you can see here, stepping up. And we've had a really nice uh, trend that has just been everything you could ask for, really, in a trend. And right now, we failed to make a new high here. So that immediately is a warning sign. Also, we have increasing volume over here. That is a warning sign. I'm going to show you a couple of other screens that I like to use once in a while. And here, what we're looking at in the bottom window down here is an advanced decline, or ADX actually. And with an ADX, basically, I'm not going to go through the whole thing, but basically, when the green is crossed over the red, you're in an uptrend. When the red is crossed over the green, you're in a downtrend. And this yellow line is actually signaling the strength of the trend. It goes from 0 to 100, but the normal range of readings is between about 10 and 40. When you get up to 40 and it starts to head down, that usually signals the end of a trend. We had that turn down back here at the beginning of the month, and this little rally, this little 3-day rally, caused it to kind of change its slope a little bit. But I think what we are looking at here is an ADX line that's about ready to turn down, which would signal the end of this trend. It doesn't necessarily mean we're going to enter a bear market. We can go sideways. We can correct through time. There's a lot of different scenarios out there, but at this point, we're going to keep an eye on that. But it's kind of looking like this trend has lost some steam here. Also, I'm going to get a sip of water here. TSV down here in the bottom window has been in gear. It's been moving up along with the trend, as you can see. Actually, you know what? Let me just get rid of these moving averages here. So we're looking at just the TSV. And here it is in red. And like I said, it's been moving up. And we got to this area over here. We didn't make a new high, so I'm not disappointed that TSV didn't make a new high. But at this point, it's in fact making a divergent low. If we look at the low right here in the beginning of November and where TSV was right here, and now we have higher price, but we have a lower low in TSV. So that's a leading divergence in TSV, which is an accumulation distribution indicator, more or less, or trend quality. And that is giving us a little warning sign. Finally, and this isn't a little bit unorthodox, but I like to use this trend channel. I've described it a couple times. If you're a telechart user, email me or catch me on the tag board and I'll give you the formula. I wrote this and it's worked great for me for catching trends. Basically, the way it works is it's kind of similar to a Bollinger Band. It tracks volatility over the average 10-day period. You can change that to any period you want. And basically, in an uptrend, the lower channel line down here serves as your stop. So if you're in a trending position, as it's moving up, your trend or your stop every day is moving up, so you're locking in your gains. But it also is adjusted for the volatility of the stock. So if we get a move that comes outside of the range of that volatility, that warns us that something is going on. It's abnormal, even in a volatile situation. So we actually had a stop out over here before this 3-day rally got underway. And this is the thing about chasing trends. You're never going to buy the bottom. You're never going to sell the top. But basically, if you got out here at 12,000 and it went up another 100 points, so you lost a little bit, but sometimes you get a big gap down or a big move down, and you're glad that you got out here. Also, you're not wasting time going sideways. So I love this trend channel, and what it's showing me right now is a stop out on this. So let's take a look at some other things. S&P 500 I'm pulling up, and another drink of water. And again, why I have that stop channel here, you can see again, there's the stop out on the S&P 500. I want to show you again, we have another failure to add to this move, and another very nice trend in the S&P, but a failure to add to that move. Rising volume over here. MACD is down here, it's negative. So all in all, I think the S&P looks very much like the Dow, and even with TSV over here, like I showed you before, I'm not going to get rid of the moving averages this time, but again, we have that leading divergence over here to the downside in TSV, and the stop out on that stop channel. Let's take a look at another here, and this is the NASDAQ, and here we go. Now the NASDAQ actually did go ahead and make a higher high right in this level, and today we got an interesting candlestick, and this is actually called dark cloud cover is the name of this formation, these two candles. It consists of one, a nice up day, which we have here, and then two, a gap higher, which we got here, and then a significant penetration on the close into the previous day's body, which this is the body here, and these are the wicks. So this penetration into this body is dark cloud cover. Sometimes, technical Japanese candlestick charting would look for a penetration of between a third and half, and this certainly qualifies for that, and it's on increasing volume. So that is a little bit of an ominous sign. It doesn't necessarily mean a full-scale bear market is going to be in effect. It could be a correction sideways, but what it says generally is that this trend right now is over. A couple other things I just want to point out. Let me clear up this screen here. Let me get to another screen. Here we also had in RSI, which is down in this bottom window, we have a basically a failure to make a new high in RSI. So here is the high in RSI that corresponds with this level. We have a new high in price over here, but RSI has failed to make a new high. So MACD is good for divergences, RSI is good for looking at divergences, and TSV, again, another leading divergence over here to the downside. So all three of those averages are looking like they're going to see a reversal of fortune here. One other average I want to show you is MDY, which is the Spider's S&P Midcap ETF, and Midcaps really failed to add to that move, as you can see over here, and really, look at the chart. What do you see here? I mean, the volume today is kind of astonishing. It is really, really, really abnormally high. So that is something to keep an eye on. And finally, again, with our TSV, we have another leading divergence to the downside. And quickly, just again, look where price is right here. Look where TSV is. Now we have higher price and lower TSV. So that's your leading divergence. I've got a couple other ideas. We're going to look at a couple other indexes, and I'm going to be back with another video.